Let's get back to markets and welcome our market master for the day, Andrew Holland, CEO at Ambit Investment Advisors. Good morning, Andrew. Thank you very much for joining us. Actually, I want to talk about your Alpha Fund today. You have a very interesting January newsletter where you're almost reading that there is perhaps scope for gloom with one Indian rate cut and that huge amount of money being pumped in by the European Central Bank and other central bankers. But before I come to that, just one word on the Delhi elections. Do you think now the markets put it behind them? Okay, one day we lost 500 points and that's that?
No, I think we'll reflect on this a little bit more. I mean, obviously, it's in the larger scheme of things, it's not a disaster, but I think it's a good reality check. So on the positive side, I see one thing is that the BJP can't be too complacent. So hopefully we'll see some more action from them. But my worry point is that we're really now just going to focus on the budget, and in its first full year. Our expectations now are going to be extremely high that the BJP will have to deliver something which will get this economy moving, because obviously you can see from the Delhi vote, whilst we all have hope and belief, delivery has to be there as well, and I think we'll all be looking for the budget to deliver something which is going to be very significant for both the Indian economy and keep markets higher. So it's become like a big event now, which is I think will keep markets very volatile, because I'm not sure what he can do in the budget which will excite me, but I'm always up for that if he can achieve it. So short term kind of it's good. It's good it gives them a reality check, and hopefully they'll continue to move forward on reforms. But I think the budget's going to become more and more of a focus area for us all now.
Okay. Andrew, hi, good morning. Good to see you, and as always, in your report you write that the markets could be in for a nice run ahead of the budget. What does that mean? What kind of pre-budget rally are you looking at, and who could be the leaders of this rally?
Actually, what we said in the newsletter was that the run what we expected, i.e. the index getting towards 9,000 on Nifty, had already been played out in January, and therefore we were feeling more gloomy actually about the global economy, and also the fact that the earnings season and with the budget coming up would see more volatility. So I'm afraid you catch me in a very gloomy mood at the moment.
Oh, okay. And is one of the reasons for your gloom the kind of earnings that we've seen pan out? And we were just speaking with Kotak just about half an hour ago, and Sanjeev told us that he scaled down his Sensex earnings estimates both for FY15 as well as for FY16. Would you be doing that as well?
Yeah, we'll probably trim at the edges. I'm still of the view that this is a domestic growth story in India, and operational gearing will play through for India, and our more optimistic view is that interest rates continue to fall sharply. So financial gearing will play in the second half of the year, which will propel earnings higher. So I'm less worried about earnings, but I'm more worried about what's happening globally, where every central bank is trying to either through interest rates or QEs devalue their currency, and at some point someone's going to be a loser, if not all of them. So I just think there's a demand problem out there which hasn't really surfaced, because a lot of it's coming from China, and the figures there are not very transparent. So you can see that being played out in the bond markets, and I have to think, why is the German bond yield below that of Japan? Is it going the way of Japan in the last 20 years? I don't know. But interestingly, with France and Germany both, hiking over to Russia to try and sort out the problems, tells me one thing, that I think both countries are suffering from a slowdown from Russia in terms of their exports, and that's starting to worry them now, and hence they're trying to get Russia back on the table and get some compromise over Ukraine.
Okay, well, that's about the global markets, but your newsletter is almost prophetic, your Alpha Fund Manager newsletter. You say that you are a little worried about the way in which the markets ran up. You expect markets to be volatile in the month of February, and with the earnings seasons disappointing and this fresh issuance, you are increasing your hedges. Now, good for you if you are hedged, but would you hedge even more Are you expecting the markets to fall further? And how would you buy your hedges? What would you be short on?
Yeah, so we're pretty hedged anyway, so I think we're 70%. So if I go any further, I have to be net short.
Okay.
I think, around 70% hedges is about right. And obviously, if I'm thinking globally, I have to think about what happens locally. So I think oil companies will continue to come down, and that's a perfect hedge. And obviously, infrastructure-related companies, I think will continue to be under pressure. Particularly the power companies, and I think you can throw in metals there because I think the slowdown is coming globally, and if that's a shock, then all of these companies unfortunately won't be able to withstand that. So that's where the sectors we're looking at the moment.
Okay, I'm sorry to keep coming back to politics, but as we're monitoring a lot of the general news channels, there are major celebrations currently underway at the Aam Aadmi Party's quarters. In your sense, after looking at these elections, I know they don't matter in the larger scheme of things, but do you think Narendra Modi's popularity has been dulled in any way? And does this change things at the centre at all? Does it change things with respect to what the budget tone could be? Anything different that the market should expect from here on?
Well, I mean, you'd naturally think, the budget could be more populist, but they really don't have the room to do that because of the deficit that they're running. And whilst the figures we've seen on GDP growth, which I honestly don't quite understand how they got to these figures, but so be it. I don't think they have room to manoeuvre. So, unfortunately, the budget does become a big focal area, for us all over the next 2 weeks, and unless he delivers. And I go back, I don't really focus on the budget. The only last time I got excited was the dream budget of Chidambaram, and since then it's always been disappointing. So, I just don't see what he can do apart from keep the momentum going at this point. So I think, with Prime Minister Modi, I think, as I said, last year was about hope and belief. This year has to be about delivery, and that's going to be the key, for the economy and obviously for earnings going forward. So I don't see, big bang budget, but we have to see more reforms and more action on the ground, particularly if we're talking about 7% plus GDP growth. I don't know where that's coming from, because no companies seem to be demonstrating that in their quarterly results. So there's a bit of a mismatch between what the numbers are and what reality on the ground is.
Okay, today the market appears to have put behind the Delhi election impact and maybe even the earnings impact, and it's actually moved higher. The mid caps are up 0.7, Nifty and Sensex are up about 1/3%. Would you start removing some of your hedges, Andrew? By the time you work up to the budget, would you be much more net long?
Probably not. Sadly, because the budget's on a Saturday and the markets are not open, it does become one of those events where you could open gap up, gap down, depending on how the budget is. So I think we'll probably go into the budget a little bit light, actually, and rather than take an event risk ahead of that. But you're going to have certain sectors, certain companies, which I'm sure will be highlighted ahead of the budget, and we'll see what that is. But I think we're going to go into it very cautiously rather than be long on the budget.
Will you be sector long on any sector?
I think we'll continue with our long on the bank. So I know they've come off a little bit, and that's fine. But we are of the view that we're going to see another possible 50 basis points cut in March by the RBI, and 100 basis points by June is a minimum target we're looking at.
Oh, that's a very optimistic expectation. Thank you very much, Andrew Holland, for joining us with your thoughts. We'll
Thank you.
Touch base with you after the budget to see how your longs and shorts have moved.